Council of Australian Life Insurers, we're very supportive of what the government's already put out on the first tranche of delivering better financial outcomes reforms, which is all about trying to simplify and make things a bit easier for advisors and cut some of the red tape. Then things really come home to roost in this second bit we're waiting for with tranche 2, which has this new class of advisor that I'm sure we'll speak about a bit later. And then also trying to solve for the best interests duty, which is a challenge that advisors face into every day. So from our perspective, one of the things that we see at an industry-wide level is in trying to meet all of their regulatory requirements, advisors, if they are able to, will invest in technology solutions, and then that makes things sort of speed up a little bit where they can, and so there are some that are doing that and having success. Others, though, are really struggling to kind of go, am I ticking all of the boxes? And what we'll see over and above is that in terms of risk products, and when they're making decisions to advise to their clients on risk products, they rely really heavily on things like advisor ratings houses. And so what we see in terms of, for my members and products, it really hampers your ability to provide innovative products, to be able to put products onto the market that maybe are solving for some of those claims challenges, pricing challenges, because of the way that those ratings houses go, okay, well, we were going to give this score because it gives you everything, but doesn't think about maybe how expensive that product would be, things like that. And so where advisors are trying to go, oh, I will use that because I can clearly document and say, I looked at these things and I got told this. I feel really confident giving this recommendation to my client. It's really hampering the ability for insurers to be able to get new products out and to people's customers.
So they're using those features, those services as a way to navigate their way through red tape.
Yes, yeah, definitely. That's what they tell us. They really rely on that to be able to say, I feel confident. If somebody comes back and says, in 10 years, how did you make that decision? They can say, I looked at this, I wrote it down, I did what it told me to do. And so that whole piece of the ecosystem, I think, is something that certainly when I go to Canberra, I try to explain, because I don't think people are really understanding from the legislative and regulatory point of view, what are the ways that people are actually going, how do I make sure I protect myself as an advisor and protect my customers? What does that mean in terms of flow-on impacts?
And I think you mentioned it earlier. I think landing the best interest duty obligation and how do you satisfy yourself that you've achieved that is so critical, because it is so difficult to do now with safe harbour and everything that you've got to do, and then hence that reliance on advice research houses or insurance research houses, for example. It's that needs to change. So I think you're right. They haven't quite landed that. It's not quite landed today, and I'm hoping that with the reforms that they do hone in on that. And it doesn't seem to be widely understood. So it's a really good point that you're making there. That if we can get through that, I think then what you can then do is potentially make maybe the education requirements a little bit more simpler, right? Because if you've got the obligation around personal advice is something that's very clearly defined, the education requirements can become simpler, and maybe the experience can become simpler. Maybe you don't need a full professional year, but you've got to get that right for starters, and I think that's really critical.
Okay, Ben, thank you for joining us today. So fantastic to have you as part of this conversation. What's your take on what Pina was just referring to?
It would be welcome reform if we could remove the safe harbour steps from the corporations law. I think a lot of the paranoia, particularly at the licensee level, stems from let's call it overreach. And so certainly good reform. You were mentioned and were alluding to the core and supplementary scores in the ratings houses. Yes. The problem with that is the difference is quite marginal. If you have a look at, on balance, the offers across the different markets. So in our conversations with advisors, there's a thought or a school of thought that those products are fundamentally homogenous, very similar in nature and build, And by default, advisors will then look at price, particularly in that first year, to form the basis of that recommendation in the main, with the exception, of course, of our specialist risk advice business around the country. But I certainly think it would be good reform. Some of the bugbears that we're hearing at the moment, particularly at the licensee level, is sending out a pre-assessment to all 8 or 9 insurers. I mean, that's adding clunkiness to what is already a complex risk advice process. So I think if we can harmonise the legislative settings, then that will solve a lot of problems for us, particularly when it comes to compliance and risk.
Harmonise the legislative session issues, certainly, but when you're talking about 8 or 9 separate submissions for pre-underwriting, surely there's, if we talk about a collective way forward, is there a way the institutional part of the sector can collaborate better in order to ease the process?
Yes, absolutely. I mean, Drew talked about technology. There needs to be more done around insurers making it easier for their pre-assessment process. In fact, the whole insurance process. That pre-assessment process needs to be potentially automated, because if advisors or their licensees are saying you need to go out to all 8 or 9 insurers for a pre-assessment, we need to make that easier for the licensee to be able to do that. So I think there's absolutely a role for the insurers to play here in technology. And I think there's also a role for insurers and advice practices to be able to integrate their businesses, because there's just so much duplication. You're doing fact finds on your side, asking the client a whole lot of questions, and then the insurer's getting you to complete those questions again through the application process. So there needs to be a better integration so that there's a transfer of information that you've already got. We've talked about doing that with banks and doing all that sort of stuff. We need to somehow find an easier way to be able to share information.
Okay, so what you're talking about it's an industry-led initiative rather than
Absolutely.
waiting for legislation to change in order to deliver different pipelines of advisors.
The legislation needs to change as well. Let's not.
Okay, we'll get to that.
We'll get to that, but yes, I think it is something that the industry can push ahead with, right from process, the technology, and also I've got to say even the product side. To your point, Kelly, around there's no innovation because we're so bound by the research houses, because advisors are so concerned about following safe harbour and making sure that they're covered, that we're lacking the innovation and lacking potentially producing simpler products that are much more sustainable and responding to claims issues that we have, because we could create these products but we're not sure people are actually going to sell them and purchase them.
Yeah. Okay, so we're moving away slightly now from talking about recruiting new advisors into the sector or retaining existing advisors. The conversation's starting to talk about, and it's still in relation to advice, the ability to simply get more of advice solutions into the hands of the consumer, whether it's life insurance advice or financial advice. So in that spirit, Keely, what Pina was talking about the need for insurers to better integrate their practices with the sharper end of the market, with licensee firms through licensee firms to advice practices. Is that something that Kelly would have a role in?
Oh, look, potentially, never say never. I think, we are very, at the moment, focused at Cali on trying to get the legislative framework in place. And so I spend a lot of my time working on that and making sure we can get these advice reforms passed, released, and then passed through the Parliament. So that's our sort of immediate focus. But we are also always thinking about how can we better serve our customers, our end customers, and the customers in between. So we do a lot with the advice community, and we intend to do a lot more over the next 12 months or so. I think once we see what's the final legislative settings, we'll have a clearer pathway to be able to have some of those kind of collaborations.
Right, gotcha. So what we'll do is talk about advice reforms in a minute, but in just finishing this conversation, it'd be great to have perspective of the dealer groups and the advisors on Pina's point about the a greater connection, connectivity, interrelationship, integration of effectively the processes and the administration required from the underwriting or new business departments and life companies with the systems that financial advisors have to undertake in order to put a new client on the books.
Look, I think that would be great if we could make that happen. I think it's been sort of talked about for a very long time, but it's quite a difficult thing to do. I think the technology aspect in our industry is a really interesting one. We talk about technology and AI making us better at what we do, but I think we really struggle to find ways, apart from maybe recording notes, etc., etc. A lot of advisors are not using technology or AI like because the opportunity doesn't exist. But I think if we could integrate into the life insurance companies, a good example might be if I want to do an increase, it automatically picks up what I've already done, populates the URE, and the client just needs to change any changes that have happened since they were last underwritten. So would be really good ways. It's a really good suggestion, and it would definitely make it easier. And I think generally consumers are quite surprised when they go through the advice journey, particularly if they do an increase on an existing policy, at how paper-driven it really is. So, yeah.
Well, you've got a good perspective, having worked in the institutional side of the sector for a long time now, with the distribution side. Niall, so you would have a good take on things of what's possible and what's not. Is it reasonable to suggest that we can develop much better systems? It's not a promo for life bit, but that kind of system could actually make a significant difference to the efficiency of the sector.
I really hope so. Like, I think, LifeBit is apparently going to, I saw a demo the other day, it looks great, so hopefully we'll, and the advisors are already using a version CDM, and about 2/3 of our practices are using that at the moment, and it definitely makes a big difference to them. That's the first time probably that I know of where they've actually been able to consolidate all the data and view it in one place.
Okay,
Just in an easy to track way, yeah, and they've got history on policies and everything, so that is definitely a good start, but long way to go.
Long way to go.
Yeah.
Your take, Drew, I know with MBS you have certain relationships with different insurers, but to the point about better integrating systems when it goes from the advice practice through the dealer group to the insurer, are there better ways of doing things within our grasp?
In the short, I would like to think so, but in the short term it would be challenging. When you had the consolidation of many insurers into a few, we also have many systems at insurers into a few insurers, and so as I understand it, the internal workings of many of the insurers' technology stack is not ready for that sort of scenario. We have gone from an industry that policies have been distributed by many to now a profession where a few are emerging. I think with some developments just in the technology in society, a few stronger dealer groups and advice practices will emerge and solve that sooner than insurers being able to. Insurers of significant size, significant infrastructure, significant complexity. Not too sure they're going to be able to solve it in the short term.
But in the end, the ultimate aim through those efficiency gains is getting more advice into the hands of more consumers.
Definitely, but not by those who have already left.
Okay, all right. Thank you, Drew. To our advisors in the room, perhaps we'll start with Bill and then come to you, Rebecca.
I think Keely's point about red tape is really important. I think just the framework that we work under, we talk about pre-assessments being a bit clunky. The reason advisors use pre-assessment, we use it a lot in our business, is number one, it protects us. If we ever go to AFCA, why do we recommend a more expensive product? Well, it is based on this medical assessment that we originally got. The use of AI and why don't we integrate that more and more we do. It's the regulatory framework we work under. Is advisors all petrified that, well, if something goes wrong, how can we be held to account?
Do you guys pre-assess with 8 or just you pick 1 or 2?
No, we don't do 8, but we do a decent amount.
Yeah.
And so it's...
And is it like an email that goes through, or is it some sort of PDF?
Yeah, it's PDF. It's all standardised, so it's the same depending on the answers. Well, yeah, it helps protect us. Why do we pick this insurer? It's because they're declining and they're giving you standard rates. Would be nice, but and so it's the red tape we live under that makes it really difficult to make any judgments outside of price, product feature scores, or pre-assessments. They're really the three reasons. If we chose an insurer that made our business more efficient and helped the client get insured quicker, then we'd have to have a really strong case that was in the client's best interest. Outside of it makes our business more efficient. We get to insure more people because ASIC, on an individual basis, as a best interest on the individual we sit in front of, it makes it really difficult to make a judgment call that helps all of our clients.
All right, so there's plenty of room for red tape to get out of the way whilst retaining the integrity and appropriate compliance and protection of the consumer.
And it's a limiting factor. This is why we don't have scale businesses. Like, Drew's got the biggest, and we're bringing on 5 PYs a year. And it's because bringing on a PY, they're under this red tape, and they create a huge level of risk for our businesses to scale up. So I think that's a big limiting factor for scale.
Okay, fine. So before we move on to talking about legislative reforms, final word to you, Rebecca. What is your view on the potential clunkiness that currently exists with regard to the management of your advice processes?
Yeah, it's a really interesting discussion, I think, to build up of what Phil's saying. Yes, there's the safe harbour, best interest, all of that fun stuff. But for us, if you assume that the business is actually delivering compliant advice, we're pre-assessing because we're trying to save ourselves time from a client telling you something that means you have to go back and do the advice again. So it creates an enormous amount of additional time, wasted time, and cost that either we bear as a business or we must pass on to the consumer because they forgot that they'd been to the physio 6 times last year or something like that. So that is very much, and we talk with clients and we're trying to train clients as to why the pre-assessment is so important. We've done an enormous amount of work as a business to develop our internal philosophies. So if we have to go in front of APCA, we can clearly explain why we work with 3 insurers, with 2 backup insurers if the pre-assessment isn't promising. Whether it's through deep relationships with underwriters who can actually get things across the board, and knowing for our advice team to know products intimately rather than a lot, sort of in a shallow basis. So that has done a lot for our business in terms of expediting the advice process and making risk advice feasible for our clients that are young, not as young as me, Kate. It makes it really much more commercial, but still we are not in a position to do risk only advice.
So you've come some way, but there's a way to go.
We refer out. I think the other clunkiness that would be remiss not to mention of it is actually collecting health data is one of the most painful parts of the process. I would love to hear your stats. It used to be 10 years ago, it was 50% of our client base were clean skins, go straight through, and now it's 1 in 20.
Who sponsors that? The community health or the underwriters?
Well, our client base, they're proactive. We have allied health galore. Everyone is, you sneeze, you go to the doctor, you're looking at different. So there's wide and varied sources of information, and the actual collection of this, whether it's UHG or alternatives, that is an enormous clunk in the process.
Yeah, and that's just an interesting point about the medical collection, definitely. It's slow here, it takes whatever period of time it takes to get a PMAR. I was amazed, I just spent 11 months in New Zealand and they're getting reports from specialists in a day and a half. And an underwriting stage next day, and that's a claim stage. I was blown away by just how efficient and effective collecting medical information is in New Zealand compared to here.
Right, I'm mindful of time and a few more conversations to have, but let's talk about that tonight. What's different in NZ, the process for collecting medical data?
My understanding is it's the way that the organisation like the UHG is connected into the doctor's practices, and they're able to electronically go in there and just collect the data.
Isn't that possible in Australia at the moment?
I don't know why it hasn't happened here, to be honest, but I was genuinely blown away by just how efficient and effective it is, and the main carrier over the UHG equivalent over there, they're trialling at the moment pretty much instantaneous responses back. And that really helps with when you're looking at pre-assessments, et cetera, et cetera. So that does exist, not that far away. We should be exploring that to see why we haven't got that.